Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 23rd of the 8th to Friday the 27th of the 8th, 2021. We've written up the weekly flows to get us underway. We're going to start this as we do the asset classes, the data cycle, and then the final roundup, just to save time. Right, so over that week, the last trading week, euro dollar plus 100. So over that period, the euro dollar as an FX pair gained 100 points or pips. Euro yen plus 116, euro pound minus 14, pound dollar plus 137, pound yen plus 167, and the dollar yen plus 17. If you plug that into the formula, you get basically a positive opposed driver in the pound at plus 318, front and back door flows mainly coming out the yen at minus 300, out the dollar at minus 220, and the euro was the positive rock at plus 202, activity plus or minus 520. So that's where we are on the weekly flows. We'll stop it there and write up the asset classes, so don't go away. Right, we're back. These are the asset classes for the week then. So the US dollar index, basically it's been pumping higher. It had a double top, it broke, it's come back, it's 0.31 from the high, so it's roughly a third down on the modelled high. So the dollar's come off a fair bit. Gold in theory should like that. Gold's been weak previously, it's now sort of grinding its way back up, 0.42 from the high, so it's over half marks now, but it's still relatively weak. Oil, big pump up, big drop down, and it's now half marks, 0.5. So it's sort of recovered half of its loss really. Wall Street then, it's been making successive highs, and basically it came off and it's not quite back at the previous high, whereas the S&P is parked above its previous high, as is the tech. So the Wall Street is, or Dow if you like, is slightly lagging in that respect. Excuse me. US 10-year then, this is the price of the 10-year bond. So basically the price has been chunking up, yields have been soft, and then it came back, price came off, yields came up, and it's now 0.40 from the high. So it's 40% off the high, which means that the price has dropped and the yields have come back a bit. And the bund, which is the European equivalent, big pump up in price, fall in yields, and now we're at 0.28 from the high. So relatively speaking, European yields are weaker than US yields, but the gap is sort of staying steady and almost closing, arguably, with euro yields closing the gap slightly. So right, copper chopped around madly a long while ago, did a big break, did a big thump down, and now it's 0.45 from the high, so it's above half marks, but it's still relatively soft. US steel basically had a very soft period. It broke the high eventually, and then it came off, and now it's 0.31 from the high, so it's about a third off its peak. So that's where we are there. We're going to stop it now and do the data cycle. All right, welcome back. We've written up the data cycles. Then China is neutral to positive. The dollar is mixed. Tier 1 is soft. Tier 2 is significantly strong. Germany is neutral to positive. Euro is neutral to negative. Yen is neutral to positive. Pound is neutral to negative. CAD is neutral to positive. AUD is mixed. Tier 1 is strong, Tier 2 is not clever is pretty bad on the Tier 2. New Zealand neutral to negative, and the Swiss is neutral to negative. So the big takeaway there is you've got this very mixed situation in the US. That's why trading is all over the place really. You've got these mixed data signals. You've got soft Tier 1, very strong Tier 2. Likewise with the AUD is in that bracket. So that's and the rest are sort of neutral to up or down. Take your pick, really. So that's where we are. Right, what's going to knock all this about next week? So Monday the 30th, we've got German CPI. Tuesday the 31st, we've got China non-manufacturing and manufacturing PMIs, Euro CPI and CAD GDP. So the first 2 days of next week are basically inflation based data. On Wednesday we've got the ADP report, which is the employment report, which is leading us into the NFP week. So remember, it's NFP Friday next Friday. So basically Jackson Hole Summit, we got lined up for sort of they sort of wheeled out hawkish members of the Fed, and then the main guy came along, Powell, and knocked it all down and went sort of fairly dovish in the market's perspective, basically saying there's no start to the process of tapering in September. So that put the cat amongst the pigeons basically there. So you then got this weakening dollar effect. Right, so that's where we are. Right, so just to remind you what's been happening with the flows then. So let's just check we're on the right sheet. Right, so the week we've just had, the 23rd to the 27th, we've had a positive driver in the pound at plus 318. Front and back door flows mainly coming out the yen, out the dollar, and the euro was positive. So we've had pound strength driving this week, mainly yen weakness, dollar weakness, and euro strength. Last week then, the equivalent, we had pound weakness driving at minus 551. So we've had this big reversal. So last week you had a weak pound driving, and now we've had a strong pound driving. So they've basically recovered probably about 2/3 of that drop. And the dollar was strong, and yet it's weak. And the yen was strong, and yet it's weak. So we've had a reversal from last week basically. So that's where we are there. Right. So let's look at the overall situation then. So we've got this dollar, euro, yen and pound. We've just had basically the main events of the Jackson Hole Summit, presumably. You never know, but presumably this was this tapering conversation. And that was sort of fairly negative on the taper. We've got and we had a reversal in the dollar basically. The dollar softened off. And the dollar is operating at about 0.31 from the high. So the dollar's come off about 1/3. Right, equities are pretty much punching highs. So equities high. So that's where we are there. And normally you get a soft yen transmission with there. And over the week, where are we? We've had a soft yen, so arguably that was the case there. The pound had a big pasting last week and has now retraced about 2/3 of that retracement. So the pound is sort of coming back up, and likewise the euro was soft last week, and it is come up. So the euro's sort of hockey stick like that. And the yen, finally, last week was strong, and it's now soft. So that's what we're looking at. So the dollar's done an about turn to the downside, the euro's done an about turn to the upside, the yen's done an about turn to the downside, and the pound's done an about turn to the upside. So we've got this reversal in flows. And it's just a case of where we're going to go from here. You've got NFP week coming up. I mean, clearly that data has been factored into the Fed's decision. A couple of comments were made that people were saying that you could argue that the US has got the tightest labour market in years. And what does that mean? Basically, that the tightest labour market means that inflation is going to be really quite strong. I think I think that there's a lot of conflict in this situation, in that you've got this disappointment in the taper, but you're likely to see bottleneck inflation still rearing its head, and the dollar is quite likely to be at best neutral, and more likely to start to wind up again next week. Obviously, we'll need to see the Asian flows to make any sense out of it. You've had a good pump up in commodity currencies off the back of the equity rise, and we'll see. Now, ADP report, not usually a particularly good indicator for the NFP, but we'll see what happens there. So really, we're looking at that's the situation in terms of the majors. The dollar is quite likely to retrace back upwards next week, particularly if we start seeing strong inflation data coming through. So that's where we are. Look out for a resurgent dollar again next week, and we'll take it from there. We'll look at the flows and make some better decisions on Monday, hopefully. So I hope that was useful. Thank you for watching. See you again Monday. Thanks.